Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar staged an impressive rebound off the key level of 69.70, and from there the market is now looking for direction and maybe even struggling due to the fact that the technicals didn't follow suit. From the rebound, we've got a bullish engulfing Japanese candlestick after the US dollar retreated from 100 to 99.78. Sentiment improved after President Donald Trump announced he had cancelled planned strikes against Iran and suggested a potential peace agreement could be reached as early as this weekend. Despite the softer greenback, US inflation pressures remain elevated. According to the US Bureau of Labor Statistics, the producer prices, that is the PPI, rose 6.5% annually in May, the highest reading since late 2022. While monthly PPI increased by 1.1%, both above expectations. The data reinforced expectations that the Federal Reserve may keep interest rates higher for longer, with markets lifting the probability of a December rate hike. Attention now turns to next week's RBA meeting, where policymakers are widely expected to leave rates unchanged, although some economists still see scope for further tightening later in the year. So turning to the technicals, as I said, the rebound was impressive of the level of 69.70, but appears to be struggling. We would need confirmation of this engulfing candle, and I would like it to see it clear all these candles here that hold around 70.55, and if so, could reignite the move on towards 71 to 71.5. But as I mentioned, looks a little bit uncertain, and we may get a pullback towards the bottom side to retest the lows, then the correction. Turning to the euro, it also has posted an engulfing candle after the inverted hammers that we can see here. And from that, the market is still attempting to recover, but lacking, and still no confirmation to this engulfing candle. But yesterday's European Central Bank, as widely expected, delivered a 25 basis point rate hike, taking the main refinancing rate to 2.40 or 240%. As policymakers continue to battle inflationary pressures fueled by higher energy costs. Attention now turns to whether the ECB signals potentially tightening, with markets still anticipating one more rate hike later this year. So looking at the technicals, we can see that the market is still wavering, and therefore, while capped around 116.0515, could see a retest the lows, not of 115, but maybe around 114.5, then a correction. Turning to dollar yen, well, we did get a very heavy pullback overnight. No talk of intervention, but we're back above the 160 from the rebound that we can see here from 159.5. I still feel that there is still much risk to the upside and maybe seeing another candle that could wipe out a lot of these gains. So a bull trap may be forming, and also keep an eye in case we do see that heavy decline because the technicals have broken down. Turning to the sterling, we have an engulfing candle, but that's still, like the other two, lacking momentum. All eyes will be on the UK GDP later today. We find that the market may progress weaker, then we get a retest back to the bottom side of the range of the lows of 133. Having a look at gold on a weekly bias, we can see now it looks like it's going to post its fifth consecutive negative candle, and if so, the market may continue to weigh on the support. A good bounce though, but not enough to support, as you can see here from the candle, ADX, RSI and MACD. So we could see the lows again and see another decline back towards the lows of 4,000 and reassess. Wrapping up with oil, the market still weighs on this support around $84 a barrel and an engulfing candle. Well, I feel the market's not fully prepared for the move down, but if we do see a break, it could be short-lived towards 82.5 and then see a bounce. That's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoyed a great start to the new weekend.